These are the primary types of businesses that require tax filings, and when you're self-employed, sole proprietor, that goes right onto your Schedule C, onto your 1040. But the partnerships, they don't become taxed, they are not taxed, but the percentage of your profit or loss goes into the individual partner's tax return. These will generate a form called a K-1. A K-1 is simply the end result of the company's profit or loss as a percentage of that partner's ownership. And that K-1 will go on your 1040 in a Schedule E. And the S Corp is very similar to that. It will also generate a K-1 form, and that will go on to your 1040, Schedule E. Now a C Corporation, however, does pay its own tax. It gets taxed at the corporate level at a corporate tax rate, and then if you take money out as a distribution, those dividends are taxed on the owner's Schedule B Form 1040. So we call this double taxation because you're paying tax first at the corporate level, and then again the individual owner is going to be paying tax when they take money out as a dividend. And finally, nonprofits, these are not taxed because they're a nonprofit, tax exempt, and they would be filing Form 990 or perhaps an 1120H for a homeowners association. Now so these are the various business types that we just described: the sole proprietorship, the trust, the partnerships, and the corporations. Now there's various tax agencies that impact each one of these. We're in California. Some of these directly apply if you're in California, but they may apply to other states, different names of the agencies. For the most part, there are almost 6 different tax agencies that we have to be concerned about. I'm going to use an acronym for these organizations to help us remember what they are: SIFESC. And that doesn't mean Southern California, but it just helps me remember. Now the S is the Secretary of State, SOS. And this is the starting point for most organizations. You need to be registered with the Secretary of State in the state that you're going to operate in. The I, as we know or will know, stands for the IRS, the Internal Revenue Service, Department of Treasury. And in California, we have the tax agency called the Franchise Tax Board, FTB. In a lot of states also called the Department of Revenue, but in California it's called the Franchise Tax Board. We also have what we call the EDD. This stands for the Employee Development Department. And as I'll discuss, this concerns payroll. If you have employees, you need to file tax returns with the EDD. And also the S here we'll call for sales tax. And in California, we have an agency called the Board of Equalization, BOE, but I'll just use sales tax because it's easier to remember. And that's if you're going to be selling durable goods or products to the public, you need to file with them. And last, this is the city tax. Whether it's in LA or Beverly Hills or Santa Monica or wherever city you're in, they will be taxing the businesses normally based on revenues and property. So these 6 agencies, Secretary of State, the Internal Revenue Service, the Franchise Tax Board, the EDD, the Board of Equalization, and the city agencies are all tax agencies that will impact these various corporations. And I'm going to explain which ones are affected and which ones are not.
Located in Los Angeles, call Hebeler Accountancy at 310-312-8700 or go to their website at cbhcpa.com.